it's a negative trend over time.
Doesn't matter what the chart says.
Not as exuberant about the acquisition as they were when it was first announced. And also remember, beginning of January was a space where everybody was very, very psyched up about SPACs. And that's exactly, if you've been following me since that time, when I've been telling people, think about buying value stock, think about buying stocks with high free cash flow, high profitability, because the inflation fears are going to hit the growth stocks over the head for this particular period. So put fresh money into those. Don't run and hide. But that's what I've been saying for 5 months or so. And again, guys.
And that's fair. If you are afraid of inflation and you're trying to make money through dividends by investing in high profit companies, then yeah, invest in those companies. But if you're looking for growth, that's completely antithetical to what your goals are. Your goal of a growth company is to invest in a company that's young, it's still growing, which means that their expenses are higher than a non-growth company, because you believe that in the future they're going to be able to stop spending so much and actually make a profit, right? By decreasing their expenses because they've grown enough where they can start focusing on making money, on actually making profits. But as for the future, if you want that now, you're not looking for growth. You're looking for a safe investment that is actually making money, and you might want dividends for it. And because you're a dividend investor and you want to make passive income, or you're just retired, and that's what you're ready for. You're ready to maintain your wealth. But if you're in the stage of growth, of building wealth, you're not looking for just profitable companies. That's not what's most important to you. What's most important to you is whether or not these companies are growing today and if they can become profitable in the future. That's what's important, right? There's 2 stages to wealth. There is wealth building and wealth maintenance, right? You have to build it and then maintain it. So you have to figure out what stage you're in. Don't just listen to some YouTuber who's telling you, oh, go buy the most profitable companies today because they're more profitable than the growth companies. If you want growth, that's not what you believe in. Right? That's not what you're looking for. You're not looking for the most profitable companies today. You're looking for who can become the most profitable in the future. But today they're still growing. They're still spending money. They're not profitable that much. And if they are profitable, it's 3% or it's 20% or whatever, right? Because you believe that they will continue to grow. And in the future, it might be 40%, right? Or 35% or whatever. But what he's saying here is only half good. He's making a good point about inflation that's coming out if inflation does increase. But what you do with that information, what he's suggesting, is not really meant for growth investors, people who want to invest in appreciation, right? So let's finish. Let's keep watching. I know I keep saying let's finish, but let's keep watching. I want to give him his fair time.
If you want to understand inflation investing and really how to build a long-term strategy to really make money no matter what the market is doing, and really understand all these economic indicators that are being bounced around, check out my course, guys. It's 39% off with the coupon FREEDOM, and that's what we all want, financial freedom. So
I don't know too much about charts. I'll admit that. I'm not a short-term trader. I'm not a trader at all, right? I invest for the long term. That's what we preach here on the channel, right? The bull mentality. The bull mentality is that we know what we invest in. We understand what we invest in. We believe in what we invest in, and we hold for the long term because that's how we build wealth in this country, right? That's how we give ourselves the best chances at success in the stock market, by investing in companies young and holding on for the long term and benefiting from the appreciation of the value of our assets. We are net holders of assets, right? That's been shown to work out very well for some people like Warren Buffett, if you know who he is, right? So I don't do too much trending. I don't do it at all. I don't understand it. I don't pretend to understand it. But what I wanted to say was that I don't want to pretend to know what Felix's motivations are and what his incentives are for making this video. But one thing I want you to be careful of is people out there trying to sell you courses, right? And the reason I say that is if people are trying to sell courses, what they have to do, the way they sell more courses, is by pumping out more content and then upselling you on those courses, right? I do similarly. I make videos and I have a Patreon community to help more people, or a select amount of people, answer their questions, make a community for us to all collaborate on investment ideas. And they've actually helped me find my best investments, including IPOE, including SBE, NCCIV, Lucid Motors. So I've been helped a lot by my Patreon community, but I don't sell courses because I make YouTube videos for that. The information that I share are on YouTube, right? I just have my Patreon community so that I can help more or select people who really need my help or want my help, and have a community so that we can all collaborate. That's what I do. But people selling courses, they are selling it for hundreds of dollars, maybe thousands of dollars, and they have to make content to upsell you on that. And that means that they're going to make content as much as possible. And that means that they might not do the best research. They might not take the time to look into what they're going to talk about before they actually put that video out. So what I pointed out at minute 4 in this video was that Felix made a critical, fatal mistake in his math. And he used that as his basis of his argument throughout the entire video. And when he was faced with new numbers, the numbers right in front of him, they were given to him, and the math was clear that SoFi has grown by about 50% per year, 35 to 45, 50% per year in the revenues. He stuck to the previous lie, the previous, I don't know if it's a lie, but the previous misinformation that he came up with early on his video. Why did he do that? I don't know, but I can theorize that maybe it's because he had to just get this video out. He had to just get it out because he had to upsell his audience on his course. Again, I don't know. I don't want to pretend to know what Felix's motivations are, but that's just how I see it from this, right? So be careful who you're listening to. Know their incentives, know their motivations, why they're doing what they're doing, and why they're publishing misinformation. Because he saw this video, he edited this video. This wasn't a live stream. He edited this. He took his time, went through and edited it. He saw his mistake twice and still published it. And he could have very easily debunked all of his arguments that I've debunked by himself if he had actually taken the time to look at the graphs, to look at the presentation, and not just be a skeptic, because people love seeing skepticism. People click on that. People love to see train wrecks, right? So they click on that. It's easier to get views by doing that, right? So that's how I see this. I don't want you to think that I'm trying to bash Felix. The only reason I came out in this video so quickly, I wasn't planning to do this. One of my patrons, a B, messaged me in our Discord community and said, "Hey Lincoln, what's your thoughts on this bearish review of SoFi?" And so I was still at work, so I took some time off real quick and I watched the video. And I said, "Hey, here's my thoughts." But then I saw some of his viewers' comments that said, "I just sold all my positions. I just sold all my SoFi stock, my IPOE stocks, because of what you just said." Of course, Felix was very responsible and said, "Hey, this is just entertainment. It's not investment. It's not investment advice. Do your own research." He said that, so that's fair. He did that, but he put the information out there, and he has 20,000 subscribers, so he has a responsibility to put out the right information, not misinformation. And because he edited this and still published it with all the errors in it, that doesn't sit well with me. And I had to come out and at least warn my audience, right, that hey, I love SoFi, but I want to see counter arguments. But this is not one of them. This is not a good kind of argument. There is not one meaningful and correct argument in this video. And I've watched this twice now, by myself and then once with you guys here right now. So he might be short on it. Toys and Fun for Kids says Felix is short on it. So maybe, I don't know. I don't know Felix. I don't know anything about him. I don't want to bash him. But the only reason I'm doing this is just to warn my audience and other people who might be watching this video so that they can at least see a counter to what he said. And I think that he just did not research this. He didn't even take the time to do the math. Because if he had done the math, he would have seen that 50% is not 16%. Right? And that PayPal is not a good comparison. It's not a good comparison to SoFi. And that JP Morgan and Chase might have higher EBITDA margins. But why? Because they have much lower revenue growth at 9%, 13%, right? Then SoFi, who's at 26%, 35%, 44, 45%. That's more than 50% at the lowest number and the highest for JP Morgan. So that's why they have lower EBITDA margins, right? It's a give and take. You want higher margins, you got to decrease your expenses, which means that you can't invest in your future growth as aggressively. So why? Ask the question, why? Right? You don't just say stuff. You can't just say, oh, if all else was equal. Well, no, it's not all equal. There's differences. The sky is not green. The sky is very much blue. And down here it's very much hot and I'm sweating under this suit, right? And I have terrible allergies because there's pollen out there. I can't just say if there's no pollen, I will be great right now, because there's pollen right now and I'm sweating and I'm sneezing all day. So you have to ask why. You can't just make things up. And when you see the facts, you don't just ignore them. Like he did. He saw it. I saw it. I can hear it in his voice when he was looking at it. He took a pause and he saw 980 versus 1500 and he still says 16% when that's very much exceeding 50% growth. So that's why I make this video and I did it live, because I want you to understand that we all make mistakes. And I've made mistakes in the past after publishing, but I will never publish misinformation knowingly. And I think that Felix published this knowingly just because he had to sell his course. So that's how I feel about this. So be careful who you're listening to, and if you enjoy someone's videos, hit like. Let's keep watching.
What I would do is,